Fantastic. All right. So we've completed continuation patterns. Right. Now we're moving on to reversal patterns. Right. So the first reversal pattern is the head and shoulders. Head and shoulders. Head, shoulders, knees and toes. You remember that song from primary? So head and shoulders, guys. Right. So this is how your head and shoulders looks like. So price will go up, then it will drop, forming the first shoulder. Right. Then it will go up again, drop, forming the head. Then it will go up, and eventually it will drop. Right? Okay. Right. But you as a human, just like you as a human, right? The meeting point between your head and your two shoulders is what? The neck. So we also have what we call a neckline. Right? This is known as a neckline. That's the meeting point for your head and your two shoulders. Right? Okay. How do we trade and make money from this pattern? Right? This is how you can make money. So the distance from the head all the way to the neckline, right? Let's say that distance is 150 pips. You follow? Right. You'd expect price to travel this exact same distance from that point there, from the breaker, all the way to there by exactly 150 pips. So from there all the way till there. Okay? Right. How do we enter? Where do we place stop loss and everything? Okay, so our entry would be on the break of the neckline, right? So that would be our entry. So the moment it just breaks the neckline, that's where you're looking to enter, right? Then your take profit, obviously, is the target. Your stop loss is just above. Cool? Then we also have an inverse head and shoulders. So this one you are selling, the other one you'll be buying. So price will fall, drop, go up, drop, forms the head, drop, and eventually it will go up. Right? Same thing, we have a neckline there. Right? How do we make money from the pattern? The distance from there to there. If that distance is exactly 100 and let's just say 125 pips. It's not always 125 pips, remember, it's just an example that we're using here. Right? You'd expect price to move from the break till that point by exactly 125 pips. Right? From there all the way to there. Your entry is just on the break of the neckline. Right? Your take profit is obviously the target. Your stop loss just below that. That would be your stop loss. Cool?
To give you guys a live example, which is current. This is dollar Swissie, and it has formed the first shoulder, right? This is the head, and now what is it trying to form? Second shoulder. You see. So it actually makes sense that price eventually will form the second shoulder. Take a look at It's actually quite interesting. This must have happened this week. This was 20th. So the 20th started to descend. And look, what did it form? That's a broadening wedge. Yes? This pattern here formed a broadening wedge, which made sense that price is going to fall, but not for long, because it has to form another shoulder. Because this is overall, and this is actually very powerful reversal pattern, in the sense that price has actually been descending for a very long time. So once this forms, and this takes a long time, you can see it started forming on the 20th of December, January, February, March, April, almost 4 months now. Probably take another 10 days to get to the neckline, and then breaks going back up. So this broadening wedge was temporary, but the bigger picture is an inverted head and shoulders, which we're looking to all trade with it, which is the neckline. So that's one to keep watch of. So with time, you have to learn how to spot these patterns before they actually complete. It makes a lot of sense, right? You have to learn. It's not just about, okay, I now know how to trade patterns, but you only know how to trade them once you've just seen them completing and take profit has been hit. That defeats the purpose. So you just have to learn to spot. I spotted it before it actually formed this reversal candlestick here, and because I was actually looking to sell initially, because I had only seen a broadening wedge, but then I drew the whole thing. It made sense, like, okay, fine, this is actually a reversal pattern. Price, yes, momentarily is going to go down, but eventually is going to go up. This is very important.
Okay. We got that about our head and shoulders. All right. Another thing maybe that you should note about your head and shoulders pattern. Sometimes it can form multiple shoulders. So you can have a situation where you have like 2 shoulders here, right? Or even 3 sometimes. You can have, even here, you can also have 2 or 3. Also, even the neckline as well. Sometimes the neckline can be inclined upwards, right? It's not always horizontal, right? Same thing here, it can also be inclined downwards as well. Does it make sense? So it's not to say, hey, head and shoulders pattern, it has to be horizontal. No. Right? Like if you're to look at that illustration over there.
It's a very recent head and shoulders also. I think we traded it on TSM. It's 2 shoulders, right? It broke momentarily, then we went up to form a third shoulder before breaking again. That happens sometimes, right? So, the patterns usually are very perfect, but it can't be perfect like to the T, because there's millions of people trading the exact same pattern, which is, actually it makes it quite difficult. We always talk about people think that if you just know how to draw patterns, you now know how to trade. Anyone can learn how to draw patterns. In 2 weeks, if you actually apply yourself, you will know how to draw them. You will know how to identify them easy. The next step is managing the position, trading this particular position. Imagine, what would you do if, let's say, if you trade, for example, you feel like head and shoulders it's got 2 shoulders, right?
Yeah.
How would you trade this particular situation where you wait for a break of the neckline and you get sucked into the position and it retraces, taking your stop loss? What's your psychology?
I would just say I've lost everything.
You've lost everything.
Yeah, like
You've risked everything.
yeah, for
You've
sure.
risked everything.
Yeah, for sure.
Who else? He says you'd have risked everything. What would you have done?
No, no clue.
You'd have traded again?
No,
Just traded once?
I never traded.
Well, for me in that situation, no, not before that. Before I take the trade, I think I'll wait for a confirmation candlestick after the break on the neckline to show me if it's really gonna go down or it's gonna retrace back.
I don't know if that's what you'd really do. What did you do? Yeah, what did you do? If it sucked you in and then you see it going back up, getting a stop loss. Forming, you can see it's forming a third shoulder.
I will just monitor it. I will just monitor it because those diagrams will be drawn, right?
Well, you can't see the future. You can only see what's coming.
Yeah, but I mean, monitoring the price, is it like when it hits my stop loss, I won't forsake it like,
You won't leave it.
I won't leave it.
You monitor it.
Yeah, I will monitor
most
it.
likely you enter this position again.
Yeah, rather I will put a sell stop. Because like I'm seeing there, maybe I'm wrong, but as it's going up, it's forming something there that's confirming it's going.
Like broadening wedge.
Yeah.
Maybe on the smaller time frame.
Yeah.
You wouldn't wait for confirmation. Candlestick over here. You once you see it break. You know, trading is the feeling is exhilarating. Right? Everyone likes that rush. That's the honest. That's a reason why a lot of us do it. Because of that, you want to be part of. Which is why patience. People are so impatient, right? Because all you want is to be part of the trade. You just want to be part of what's going on, which is why sometimes we all enter prematurely into positions because we lack the patience. But the honest truth is, we just love that rush. We just want to be part of that move, which is why everyone here will sell. He was very correct because he was saying that he would risk everything and sell. And if you see it breaking, it's a stop loss. Some people will then remove their stop losses during the trade, hoping that price is going to reverse. Some people will let the stop loss get hit and then enter a buy because they see going up now. And then some hits their stop loss, first stop loss, and then they'll sell again, which is still that none of those actions are acceptable in the sense of, look, if you're trying to be disciplined, look, you lost. It happens. No one knows the future. It could break and continue going up, but you keep selling and then you end up blowing your account. Right? Or you could sell, but now you don't really know where to place your stop loss. You end up putting it too tight. You see? So discipline, counts for a lot, especially in situations like this. Yes, the trade ended up working, but if you didn't get it the first time around, there's more better opportunities. Yes? But I will say it's not the easiest pattern to trade, but it is probably one of the most rewarding. As you can see, the drop was spectacular. It's quite aggressive, right? It took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 days. That's what? Almost 2.5 weeks to get all the way to the bottom, which is, look, your risk reward ratio here, if you entered, let's just say you entered here, look, your initial take profit actually was supposed to be here because you need to cover the distance of the head. So that your take profit is the distance between the head and the neckline. Just take profit here, your stop loss here. But look, in a sense, the risk reward ratio here would have been what? This is 307. and this is 739. So almost like 1:2, right? But if you dropped it all the way down, oops. Oh, that is new. Still fine. It's 5. So if you risk $1,000, you make
You'd have gotten $5,000.
in 16 days. Would you wait 16 days? No! No ways.
But guys. I mean, we're professionals at waiting for a salary for 30 days. 16 days, half the month. Oh, you'll be seeing it? Ah, okay.
Sometimes there are scenarios where you'll see your take profit there, right? And you see the chart or the candle actually dropping, nearly hitting your take profit, then going back.
No, that's acceptable.
So I think by then, with my emotions, when I see reversing, I'll say, nah, I'm taking this money now. Take and walk away. That's why I'm saying 16 days will be kind of a difficult time for you to wait for all that money to come by.
Wow.
Do you know that traders, humans, were most likely to hold on to losing positions than winners? People are most likely to hold on. If you were to ask them, okay, just to say a couple of companies that went down, not down, but if we were to find out how many people still have BlackBerry shares, there's probably quite a lot. But if you ask people how many people still have Apple shares, most would have sold them a long time ago while they're in profit. People are so scared that what's good will not stay good for a long time. So people, you'd rather hold on to a losing trade because you're so hopeful that it's going to reverse, which explains why people tend to remove their stop losses. Because everyone has hope. Humans are naturally one of the most hopeful species out there. So, but very fearful of losing it all. So it's surprisingly enough, interestingly, you said that if you see it reaching your take profit, you immediately feel like, okay, I need to get off the position now. But when you see it reaching your stop loss, you would rather remove your stop loss than close the position. It's crazy. It's crazy stuff.
Okay. All right, I think we need to proceed with our patterns, huh? Okay. Any questions on Head and Shoulders pattern? It's clear, the structure, how to trade it, how to make money from it, huh? Okay, we can proceed? Yeah. Fantastic. Right, so we're moving on to rising and falling wages. Isn't trading so interesting? I mean, back in primary, we used to draw triangles. All right, we used to draw shapes and all. And then you come to trading, and the first thing we tell you is, guys, you can make money from those shapes. Interesting, huh? Okay, so rising and falling wage. This is how a rising wage would look like. So you have your resistance, then you have your support, right? So price will go up, down, up, down, up, down, up, and eventually it will break to the downside. You follow? Okay? Your falling wage would look like this. You have your support, then you have your resistance. So price will go down, up, down, up, down, and eventually break to the upside, huh? Right. Then how do you make money from the pattern? The distance of your base from that point there all the way to here, let's say that's about 100 pips. That's from there to there. Right? So you'd expect price to move from the break there till that point by exactly 100 pips. You guys follow? Yes. Same rule applies to your falling wage, huh? Distance from there to there, that is the base of your falling wage. Let's say that's about 150 pips. That's from that point there all the way to that point. You'd expect price to move from the break there all the way to there by exactly the same distance, huh? So from there to there. Right? Your entry, your stop loss, and take profit. Right. So for your rising wage, huh? Right. Your entry would be on the break of support. So your entry would be right just below there. That would be your entry. Your take profit is obviously the target. That's your take profit, your stop loss just below that. You follow? Okay, let me just divide my board so that you guys are able to see. Right? Then for your falling wage, this is how it would look like. Your entry, same thing. It's on the break of the resistance. So this would be your entry. Your stop loss just below that. Your take profit is the target there. Cool? Right, but you also need to understand something about the pattern as well. A rising wage is known as a bull trap. Right? Reason being why, can you see how generally price has just been going up? Right? Bulls have been in charge of the market, huh? Right? But what tends to happen is, from that point to that point, they're in control, huh? Then you find bears jump into the market, right? Taking charge again. Then, there's a fight. Bulls and bears. Who is going to take control? Bulls win again, right? They experience that whole tension all the way to that top over there, huh? Right. So let's say this is you. You are the guy, you are the bull in the market. You're the guy that is pushing the price up from that point to that point, huh? Right. And you've been experiencing this whole turmoil in between, huh? The whole fight and everything, huh? At some point, you give up, huh? And you exit the market. Say, I'm done. I think it's enough, huh? Right. So, if you are a bull and you're now jumping out of the market, what does that make you? A bear, right? So immediately, you then also induce the price what? To fall. Right? Because you've been caught up in this short squeeze. Right? So you're then jumping out of the market, then you see the price just rapidly drops. That's why you turn to see what would happen with this pattern is, most likely whenever it breaks, it's so aggressive. Because it's showing exhaustion. It's showing exhaustion of people. Bulls are now exhausted. They're just jumping out. Same thing with your falling wage. Your falling wage is known as a bear trap. Right? Bears have been pushing price down from that point all the way till that point. They're now exhausted. They want to jump out of the market. Them jumping out of the market makes them what? Bulls, huh? Then it forces the price to what? To go up. Does it make sense? Is that cool? Okay.
I just want to give an illustration here of the term when Monash was talking about it being a trap. I'll not do something for you. the previous pattern that we're doing, reversal pattern, we're doing head and shoulders, yes? Okay, take a look at this. Let us assume that you're trading this head and shoulders, right? So you have this very strong conviction that price is dropping, right? That's the general direction for the next couple of months, right? And you're selling, and this is where you're selling, right? You're selling, and with time, this is proving to be a falling wedge, right? So much was saying that this is a bear trap. So it's trapping all the sellers that are initially selling. So a lot of people do not tend to see this coming because, look, psychologically, because you've got the self-conviction that this is a sell, all you're seeing is a decline. The last thing on your mind, basically, you're probably seeing this. What usually happens to me is that if I'm in this position, right, and I'm selling this head and shoulders, I will see the wedge, but I will find a way to convince myself that it's not really happening. It's not really happening. It's probably going to fail. But then one day it just breaks the resistance and just goes up, and it would have trapped everyone who's been selling. Everyone who's been selling is trapped in that situation. So you've got a reversal pattern that caused this particular decline. Then you've got another reversal pattern forming from that decline, forcing price to go, indicating that price is going to go up. So that's what we mean when we say trap. You get trapped in the sense that the direction you've been heading in is yet to change. The market is about to change direction. So if you're in this situation, it's a tricky one to be, I will say, because psychologically you will hold your sell position till it's too late. But then we'll explain further how to protect yourself by then moving your stop loss down to at least recoup some of your profits. So always watch out for these wedges. They always seem to form, and you only notice them when it's not too late.
Does it make sense, guys? Yes. Any questions regarding the rising and falling wedge?
I see these things, they work almost every time. Yeah, nothing is perfect in trading, like you can say 100%, but most of the times it works. My question is, are there particular names of people who formulated such great things, or these are your ideas? Or these are your findings, and are they names we shall create?
Let me tell you something about patterns. Patterns are basically a representation of human behavior in the markets. Yesterday I was saying patterns will form in the same way under certain conditions, under similar conditions time and time again, right? It's the same example of, if there was fire in this room, we would all think of exiting. But funny enough, we would all want to exit using the door. No one's going to try to open the window. We're all going to congregate and just try to jump out using the same route. So patterns, the reason why, in the sense of like the take profit always seems to be where the price ends up reversing once it reaches the take profit, right? Over and over. It's just that we all behave in the same manner. Humans just probably the most predictable species. We're very predictable, right? Which is why that resistance or that neckline, and you ever wonder why when you're drawing your support and resistance, the price always just seems to just stop at the resistance and then drop, and you wonder who is really doing all of this. right? We're all look. Whatever resistance you think is there, it's the same example I was using yesterday with the dollar rand rate. When it's now 11, you know that okay, 11 is a bit too low. This is the support for everyone. When it gets to 1670, which is why now the dollar rand rate is dropping, because 16 was the max ceiling, all-time highs. Everyone knows that. So patterns is just us. It's just representing our behavior in the market, which is also very predictable all the time.
I think from what you're saying, basically, if someone needs to draw a chart of your movements on a daily basis for a week, it will basically draw out almost the same pattern almost every other week. So they've actually, because of the studying of the nature of how the price moves up and down, or then eventually forming a certain pattern towards it. So it eventually makes sense to someone to say, when this kind of condition happens, you are basically likely to see a certain breakout towards this direction or something like that. Yeah.
Just take the example that TK is giving, right? Of you guys, we subject you to a certain condition where we have fire in here, right? That condition immediately we're almost likely to what? To run out, huh? Exactly. So same thing that we're talking about in the markets. We're saying that when we see this certain behavior, when we see this condition happening, it tells us that the price is going to behave in this specific manner, right? So even that's the reason why you tend to see patterns working also, right? Even, okay, I'll show you like a falling wedge. So, follow. We say it's a bear trap, huh? Which means bears are generally in control of the market. You follow? Right. So, what will happen is, we understand that price moves in what? In waves, huh? Right? It doesn't just go in a straight line. Cool? Right. So, let's say price moves, drops, huh? Right. Then you see consolidation. Right? What is this? This is a flag, huh? Then price will continue, right? Then you can find it forming symmetrical triangle, huh? Right? Then it will drop again, right? Then you might even find it continuing again, right? Then even dropping even further, huh? Right? But overall, can you see that it is actually forming a falling, right? It's forming a falling wedge altogether, right? So these patterns come, they're in line with the markets. It's not like you just see a falling wedge just appearing in the markets. No. It's probably because price has been dropping, has been moving in certain steps from one point to another, consolidation. Then these guys, they're exhausted. You know, the easiest way to see price action, think of it as you are the guy that is actually controlling price. You are the one that is responsible for moving it up and down. What would you be thinking? You've been holding price from that top over there, right? And you've been making it drop all the way till that point. At some point, you want to jump out, my friend. I mean, we're asking you guys about the 16 days, huh? You guys will be like, we can't even hold for 16 days. Right? So it generally shows you that humans are very predictable. So put yourself in the shoes of that person that is actually driving price down. Does it make sense? Cool? Okay, look at that example over there, right? That's dollar in. Price was what? Going up, huh? Right? Bulls were generally in charge, right? But at some point, my friend, there is exhaustion. You are humans. You get tired. Ask Usain Bolt. He'll tell you, I can't run forever, right? Then immediately you jump out. Price what? Drops. Is it making sense? Okay. Any other questions? Yes, question over there.
Let's say I have a rising wedge like that one.
Okay.
So
instead of the price to break the support, then it breaks the resistance. Should I place a buy? Or I was saying, no, the setup didn't work.
Yay. Hey. Wow. Do you place a buy when yet you've seen the rising wage? The rising wage tells you that price is going to drop, huh? You follow? But you see it going up. So do you click buy? No, you don't. You leave it be, right? You follow the rules of the pattern. The rule of the pattern says that when you see the rising wage, it tells you price is going to drop, right? So if it does not drop, it's okay. It's okay. You did not jump into the trade. The pattern just did not work. Right? But another thing to also consider is how you have drawn the pattern. What do I mean by how you have drawn the pattern? You can sometimes have, so we're talking about rising wage, huh? So let's say this is your resistance, right? And then you've drawn price has gone up, down, right? And then you've drawn and you're saying this is your rising wage, right? But maybe price still wants to make a last push, just slightly up, right? And your resistance is not correct, right? Maybe this is not the second touch that it's supposed to make. Maybe this is the actual second touch. You get it? So you would immediately be like, so you know what? Since it's broken resistance and it's not going up, what do? I buy, yeah? But yet you don't know that this is the second touch for the rising wage. Then you then see it dropping. Then you're not like, why? But what is wrong here is not the pattern. What is wrong is just your resistance. You get it? So it's very important how you draw the pattern. You see, your question has got so many scenarios to it. It's not just, there's so many other assumptions you need to consider as well, right? But that's a definite one that you also got to consider when you're trading your rising wage or your patterns in general.
It's not a question as such. Correct me if I'm wrong. It's just to add on what you said. Okay. Sometimes I think even if you have drawn it perfectly, there is what they call a false breakout in this pattern. So you'll see the price rising, but that thing will be called a false breakout because if it really follows the pattern, it will go back down, just like Munashawat said.
Yeah.
Is it correct, right?
Agree with sometimes there's false breakouts that happens, but with what much is also saying, sometimes you just have to readjust your trend lines. You have to because, like, in the markets you could end up drawing what you want. For real, you could end up seeing what you want to see. So if you really want there to be a wedge, you'll find a way to draw that wedge. I'm telling you. You will not give any form of patience. It happens to everyone. It happens to me also sometimes, It happens to me sometimes, but then I realize, it's not really it's not a lack of knowing how to draw patterns. It's really just my personality also. Everyone's got a personality, yes? My personality is sometimes I'm quite impatient, so I tend to enter trades prematurely, which is something that I've learned to live with, and I've incorporated it into how I trade. Because I've acknowledged that I've managed. You also have to put measures to stop you from just self-sabotaging yourself. So I know my weakness is that impatience, so I put measures. In that situation, if it is my stop loss, then that's fine. I know how to move on. That counts as that one trade which I would have, it's one of the 7 wrong trades.
Cool. Any other questions? No questions. We can proceed, guys? Fantastic. Right, so next pattern. We're left with 2 more. Right, so double tops. and double bottoms, also known as M formations and W formations, due to the nature of its structure, right? So a double top formation, this is how it should look like. It's just a simple price goes up, right? Reaches resistance, horizontal, resistance, horizontal. For this specific pattern, the resistance has to be horizontal. You follow? Okay, so price reaches resistance, then it drops, then it goes up again, reaches resistance, then it drops now. All right? So this is resistance. That's your information. Your W formation or your double bottom, price drops, goes up, drops, right? It reaches support, horizontal support. This is your support. Then it bounces and goes up, right? How do we trade the pattern? How do we make money from the pattern? Huh? Right. So the moment that price reaches the resistance there, and this is you're the trader, right? Price is going up, right? Okay, maybe I should specify something. I should specify. Understand, this leg here, this one, this is the one that you will make money from. You follow? This, from this point here, right? This is what you would see. This is your before, right? Then all of this will be the after, right? Okay. So you see price is going up, price is going up, price is going up, right? What you as a trader will do now, you then place a pending order, right? For a short. The moment that it reaches your resistance there, that's where you want to enter the market. So right there, that would be your entry. Right? So you enter on the resistance. Same thing here. Price is dropping, reaches support at this point here. At that point over there, right? That's where you would look to enter. That will be your entry. Does it make sense? Right. Your stop loss in this case, it's just directly above. Because if it just breaks, you know, my brother. It was wrong, huh? Same thing here. Stop loss is just below. Right? Your take profit is for the completion of the M. Right? So where your leg, this whole leg starts, right? That's where you're looking to complete, huh? Right? So your take profit is directly just here. Right? Same here. Take profit is for the completion of your information. Right? This is the most profitable pattern in trade. Oh yes, my brother. Guess the minimum risk-reward ratio you can get with this one. 1:10. No, you won't get 1:10 with this one. Not even 1:12, not 1:30, not 50, not 20, not 23, not 25, not 26, but a minimum of 1:30. Oh yes, 1:30. For every dollar you risk with this pattern, you should gain exactly $30. So that means, my brother, if you risk $100, you gain how much? 3,000, huh? Right. But now there's a catch to it. There's a catch to it. You want to hear it? That 3,000 won't come in 2 weeks. It can even take, let's say, 90 days. It is fine. Guys, is it fine? No. You know, I love this group. You guys at first, you say 16 days. You say, no, we can't wait. Now it's 90 days. We still can't wait. Guys, but understand my brother. Right, this is your $100, right? Huh? You've put it in, and then you trade this, you get your 3,000. After 3 months, you're able to go buy your car. You're able to, go on holiday. You can even go and what? And pay that lobola, my brother. In full, Right, but this is after 3 months.
What I'm saying, I think it's worth waiting because you can't get such a return on any normal investment. Yeah, with banks, you might need to wait maybe 2-3 years to get such a return. So 3 months, I think it's worth it.
3 months is worth it.
Yes.
Okay. Absolutely, man. I mean, guys, from $100, if we increase the zeros, if you put 1,000, you get 30,000. It's big, huh? It's big. So it's a highly profitable pattern in the markets. Yeah, it's a beautiful pattern. Oh yes, we have a question.
I have a question. Since it's most profitable, should I trust it on smaller time frames?
No, that's the thing. That's the thing about it, right? What you want, and this pattern only shows up in the bigger time frames. So you name it from daily and upwards. Those are better. They're the best for this pattern, right? So if you see a double top on the daily, it's an actual double top, right? But if you see it below, let's say 4 hourly, it's not really worth trying, because remember, with this pattern, it has to have reached some critical lows or some critical highs, right? Like that point where, since 2016, it hasn't reached that point. You get it? Now, you see it's 2020 and price is reaching that point. So it therefore tells you that the same psychology that you saw in 2016 is the same one that you're now about to see in 2020, huh? You get it? So you really want to be so specific. You really want to look for those extremes. Don't just jump into, I see it's on 15 minutes. No. Try to look for those extremes, right? Does it make sense, guys? It's most likely to work in such an environment like that. Because, my brother, remember, you want to put $100 and come out to 3,000. 15 minutes, it's a bit of a tricky situation. I would advise you to look from daily and upwards. Any other questions? Question over there. Okay, the questions are coming in, huh?
So what about the situation where maybe in the daily time frame there is a falling wedge, right? Then in the 1 hour time frame, then I found a double top.
Double top? Yeah. In the 1 hour time frame. And you have a falling wedge? Yeah. So what you're saying is, if you have a falling wedge, right? So if I do this, this becomes a falling wedge, right? Yeah. Then you're seeing this double bottom on the 1 hourly time frame. Yeah. The falling wedge, you've seen it in which time frame?
In a
daily time frame. Yeah. Then you're seeing the double bottom on the 1 hourly time frame.
Okay, it's like in the long run, my trend is going down. Yeah.
Oh, it's going down?
Yeah. Then I found a double bottom.
You found a double bottom?
Yeah. In the 1 hour time frame. Could I trade it or just leave it like that?
You want to trade the falling wedge, right? Remember what we're saying? We're saying that double bottom and double tops, right? You want to take them in the daily time frame and above, right? Because that's where it shows critical, resistance and support, huh? Right? So you have seen a falling wedge on the daily. It's okay. You've seen something on the 1 hourly. It's not really an aided confirmation. So you just rather you just take the falling wedge according to the parameters, huh? Does it make sense? Yeah. But although we should specify something, right? This pattern sometimes they can confirm a move, right? Like you can have 2 or more patterns confirming, right? It's known as confluence, where you have 2 or more patterns. Like in this case, look at it. You have double bottom up, price reaches support, right? Then you also have a falling wedge pattern, huh? Right? Then price, so you have two confirmations that are telling you that price is going to go up. It's most likely that the price action you'd see is bullish.